Hey there, good afternoon. This is Trader Tim from eminimind.com. Actually, it's good morning. I'm recording this video Monday morning, and we're doing a Monday market analysis video. It's the 23rd of November. And as we jump into the E-mini S&P, I want to run through two short trades from today. Pretty nice short trades that set up very cleanly. Before we do that, let's just touch on the bigger picture here for a minute. Turn to the daily chart. This triangle that we're in on the SPY, same with the Dow. Is right at the apex. And so this is a critical day, both today, tomorrow, until we can break below the swing low, which is the 19th, or above the swing high, which is on the 16th. Those will be the indications that we're going to either move higher or move lower. So if we break the swing high, we'll obviously be moving higher. If we break the swing low, we'll be moving lower. And then from there, we should go a considerable amount higher, or at least be able to go a considerable amount higher. This week, we've got the Thanksgiving holiday here in the U.S., so markets will be closed Thursday, and then Friday will be, kind of a half holiday, half day trading kind of a deal. Um, Typically, as we get into the December and holiday season, we see what's called kind of a Santa Claus rally, where you get a rally into the middle to end of December. We'll see if that holds true again this year. Now, the triangle that we have here is coming after a move up, which typically is a sign that the result direction when we exit the triangle after this consolidation occurs, the result should be up. But the longer that we stay here, moving sideways, the more doubting that ends up coming into the market, the more bears that end up being able to kind of build up positions at this point. So I'd like to see us break out in the next, sometime in the first 3 days of this week, Monday, Tuesday, Wednesday, because otherwise we go into the holiday weekend and then we're already into next week, which is into December. Now, with that Santa Claus rally in mind, and knowing that the markets have not appeared to be very rational as of late, we could easily tear up into new highs, and close the year extremely strong. But I'm just kind of preparing myself for, okay, if we do break the swing low, break this uptrend line and move lower, then we can draw a retracement from lows to highs like this, and that gives us, kind of just a middle ground for a short-term pullback. But if we do sell off, it would be more likely that we would sell off harder and come all the way down to retest this larger 50% that we have not completed its target to yet. So just a couple of scenarios, trying to prepare myself for, up, down, sideways movements, and then what will my response be if that happens. That way, if, something starts to move quickly, I already have a plan in place, and I can just kind of execute that plan. I guess I'll comment on a Tesla, moving up again today. This would not be where I would, be jumping in for putting on new calls, at least today. But if we do get a little bit of a dip like we had on Friday, certainly a good opportunity to try to put on some more calls there. I will post my swing trade watch list in the members area, along with my E-mini S&P trade recaps as well, with all of the entries and exits. Okay, ES. So today we had a little bit of a gap up here, and then a couple bars moving higher. And when we approached the top of the hour this morning, we got a high tick right up here. Well, actually, this was quarter after. Remember, the first couple of minutes of the day, ignore those nicey ticks. So it was 7:45 that we had the high tick that lined up with high price. Now, at the time, we were in a retracement long like this. It didn't make it to its target. We got a high tick at highs. I drew up the next retracement just to see, okay, what happens if we pull back? Well, we stopped right at that retracement. We stopped right here. So I chose not to take the first short like this. You could argue that this is a swing low right here because it's lower than the prior bar, and then the next couple candles are kind of higher than this little candle. So you could certainly make the case to take that short. I chose to wait for the 61.8 to break, and then I just came in and took, it was a slightly larger short. But, the entry, you're looking at an 84.75 versus like a 85.50. So not too far off of each other. I just waited for a little extra confirmation. Being Monday, sometimes I like to kind of take my time to get back into a groove. So nice clean touch, sold off, trailed my stop behind the 61.8, and then from there we sold off a little bit harder. I trailed the extension. That one ended up selling off harder, so then I trailed another extension and was taken out here at 73s. So really nice, strong move down, clean entry, clean trend. So really exciting to see that kind of a move right off the open on a Monday. And then it gets even better because at about the 90-minute mark, just before that, we came into the full halfway back for the day. And also, we lined up, if I mark the top and bottom of the first 30-minute range, you can see the low for the first 30-minute range is right where we rallied up to at that 90-minute mark. So we had lots of potential resistance, and we still had the unfilled gap down here below us. And so coming in here, drawing up, this retracement is also, it's fairly small, but you can see how the dip is a little cleaner as far as this candle breaks the prior candle's low with you can just look at it and you can see that it pokes below. This green candle pokes above by a couple of ticks, and so being right at the bottom of the first 30-minute range, drawing from highs down to lows, and then looking to take that short there about a 71.25. If you waited on this one, you could have gotten in here at a 70, and that would have been fine. But then from there, this one dove off pretty hard, and so rather than, we had the target at 52s, which was a good ways away from us. Rather than drawing like the next retracement like this and having your stop be up high 64 when the market's down at 55, or drawing the extension low to low like this, and even that, your stop's up at 63, market's down at 50 at that point, about a 55, 56. So that's 7 points. You'd have to let the market come back just to see if it would roll over. So what I chose to do, as we started falling pretty hard and fast here, I just came in and as best I could, I just trailed my stop above each candle. They move pretty quick, so it ends up being like a couple of candles, and I'm just dragging my stop down, and I ended up getting taken out here at 58s. And then even if you let it bounce a little bit and trailed the swing highs, or then came in and drew up the next retracement, I mean, you're not that far off. It would have been a 57. So, I'm okay with taking a little bit less sooner if it means I can lock in a gain and, protect what I've made. And then what you can do if you've got multiple contracts, you can leave one final contract on for kind of that big nosedive. But in order to get that nosedive, you have to have a really wide stop. So it might mean trailing the full halfway back, and that might be 10 points. And you just have to ask yourself, am I willing to give up 10 points to maybe make another 10 points? Well, if you've already locked in a big gain on the position, well then you have the freedom to, play with those profits and not be risking very much as it relates to the entire position. But if I haven't locked in any gains, I'm not going to let, a 6 contract position that's up 10 points come all the way back and stop me out for a point. So that's where being able to scale out at reasonable intervals and trying to have it, that one last contract on for a runner. If you're trading 10, 15 contracts, you could have 2 or 3 left over and still have it be a small portion of the position. But the same thing goes for swing trading stocks or even options. If you've got a half dozen option contracts on, you can kind of scale out in similar fashion. But in general, trying to always look at what's the total risk on the position, and then as you scale out, keep in mind the entire reward as it relates to the risk. So you might take contracts off at 3 points, at 6 points, and at 7 points, and then tally up your gain and relate that to your risk, your total risk, to get that relationship, that R multiple for the entire position. So I did announce last week that we'll be doing a masterclass here in December. I'll put the link for that in the description below. And if you want to tune in to the live trading session, we do those on Tuesdays, so that'll be tomorrow, and that's over at eMoneyMind.com/VIP. Thanks everyone. Have a great week and a happy Thanksgiving.